There you go. Yeah, cool. There we go. All right, so OHL. Let's find what is it? You need to remove it. Here it is prior day. Prior day OHLC. That right there will mark up the previous the high, the low, open, and the close. So if you trade at night, I would use this app right here. Is in the P section. Prior day OHLC. That indicator right there will mark up the open, the close, the high, and the low of the previous day. So that if you trade after 6 o'clock at night, this will mark off some levels for you to also take trades at. But all the other levels are the same. The triple threat, the how I choose a gap, I'll trade the gap bounces. But the only thing different from trading the New York 930 is instead of marking the overnight high and low, you can use prior day high and low, basically. And it's just an app that you can indicator that you could use, which is right here. I hit apply. You see how it has the little blue dotted lines, the purple dotted lines. You can adjust the colors of those lines if it's better. But that's for the students that trade at night. And it's right here on the side. You can adjust all the colors right here at the bottom so that you know that way it won't mess you up when you're looking at other colors. Okay. All right. So there's that right there. Um, right here we're on M and Q because I always show you guys MQ, but I want you to see M and Q as well. And as you see, M and Q and NQ pretty much move the same, except sometimes the levels be slightly off. So, so right here on NQ, let's see if it's any different. We have the open at 337. And on M and Q, where's it at? Because they have them pretty much the same. 337 double O. I 4475. So you see the high on M and Q is 4425, whereas the high on NQ is 4475. So it's just off by point 0.2, basically, just 2 points. But we all know those 2 points make a huge difference when you're trading. So just be aware of that. Hey, Charity, I think you have a hot mic. I ain't want y'all hearing her business. She talking. But also remember, if you want to mark the high and the low in the morning, you want to go to the daily chart in the morning before 9:30, and that's where you will find the very first candle on the daily chart will have your high and low for the New York session. So the overnight high is the highest point the market went between 1800 and 9:29 in the morning. So between 1800 at night or 6 o'clock at night, all the way till 9:29 the next day. That is the highest point and the lowest point between those two times. You can either go to the 5 minute chart and just zoom in all the way until you see 1800, which is about here. This line right here is about 1800. Move these out of the way. So this line right here is about 1800, right here. So you want to look at the lowest point from here forward. So from this point right here, which is 1805, you want to try to find the lowest point, which is all the way down here. This right here is the lowest point over here. You want to see the highest point from 1800 all the way up, which is way up here. So that's why I have the red and the green line to mark the high and the low. Or if you don't want to sit there and try to look at the time, you can just go to the daily chart and you can mark the very first candle is high and low. Now, if you sit down after 9:30, that's when you would have to go to the 5 minute chart and look at 1800 to 9:29. That's if you get to the computer after 9:30, because it might have went higher or lower than the original overnight high and low. So if you get to the computer late, then you want to go to the 5 minute chart and just mark off 1800 to 9:29 and find the highest and the lowest between there. So, but it's just easier to get there before 9:30, so you can just mark off the high and low there. Everybody understand that?
Oh yeah.
Okay, cool.
You know, I was looking for on
Yes.
the I was looking on the indicator side. You know how you got on this 5 minute chart right now? You know, you
Mhm.
have day separators. I can see on the hourly chart it's marked off only every hour. You follow what I'm saying? On this 5 minute chart, you see how it's marked off on hour. I was
Yeah,
looking at like on a
it's the 5 minute right here.
right, but you see like on a feel like on the hour chart, you know, you got like a day separator, like from when the day ends and begins.
Yeah,
I didn't see that on. I see it on old Think or Swim, but I don't see it on NinjaTrader.
you can put it on there. You just right. You double click on any of the candles, and if you scroll down, it should say trading hours break line. So yeah, you can put it. I just have mine off.
Okay, where you put?
Yeah, I just have mine turned off, but you can turn it on. You see how to get there?
Yeah, I'm looking. I'm looking.
Yeah. Scroll pretty much almost all the way to it's almost all the way to the bottom, and it'll say trading hour break line.
Okay,
Yeah, you can put that break line there for you.
I got you.
Up in here.
Hey, what's going on? How's everybody? Come on in, come on in. All right, so if you guys don't have the mouse to where you can click the little mouse button, if you want to see the all the data on each candlestick, at the top of your chart, right here, it will say show data box. The data box is what you see right here. If you hover over any candlestick, it will show you all the information for that candle. So on the daily, if you want to find the high and the low, you use the data box, and it will have the high, the low, open, close, time, and everything on that data box. And if you want to mark the high, you want to make sure you're right on point. So the high of the candle for the day is 21383. So you want to make sure it's 21383. 2138 and change that to a 3. 21383. You want to look at the low. The low is 21237. 2123 down 7. And in order to change that number, once you hover over the candle that you're looking at, once you get the high or the low, you just double click the red one, which is the high. And right here where it says data, anchor Y is where you would type in that data information. Because you want to be right on the dot of the high, right on the dot of the low. You don't want to estimate and be like, I'm close enough. You want to be right on it. Because close enough can change whether you jump in the trade, not get in the trade, or lose your money. So you want to be as close to that number as you can. And this was it Thursday? The 14th was Thursday, right? Let's see. Wednesday. So 14th was Wednesday. So even when you're practicing, you still want to pull up the news from the day that you're practicing, okay? So on the 14th, the only thing that was happening was nothing really. It was nothing really happening on the 14th. FOMC, CV, crude oil, 1030 crude oil, 14th right there, 1030, you got petroleum. So when you're practicing, you still want to be aware that 1030 there was some news. So that way when you're practicing, you don't get your head knocked off. And was that? What was that? No. Yeah, so you still want to check the news of the day that you're practicing. That way, if something crazy happened, it won't you know that it's not your fault. It was just news. So
So, Mr. H,
uh,
how long do you suggest that we wait before we trade on the news or after the news?
a minute before and up to 2 minutes after. I like to wait for it to settle. Like as soon as the news happen, if the market starts jumping up and down, wait for it to relax a little bit. You can wait for it to slow down. Sometimes it's only 2 minutes later, sometimes it's 3. But by by the rules of the rules of Apex, they just don't want you trading a minute before and a minute after news. That's their rule. But I will wait at least 2 to 3 minutes after the news. That way you can be sure that it's over. Yeah, but always check the news. All right. Now on the daily, I normally don't do any other levels on the daily chart unless something just stands out. So like this level right here, I notice it's a gap right here. Even though it's a daily gap, you trade a daily gap a little bit different than you would trade a 1 hour or a 4 hour gap. Okay. The main difference is on the daily gap, it's almost guaranteed to go past that level. But it almost always comes back down below it. So with a daily level, you just got to give it some grace to go a little bit past where your line where your line is actually placed. So if it's a daily triple threat, the market is going to go a little bit past it because a daily level is a very big level. So it's going to go past it a little bit. So if you see a daily level, just make sure you give it a little bit of room to breathe before you just jump into a trade. And that's one thing I see up there. And and I go down from there, 4 hour, and I look for the same thing on a 4 hour. I look for any kind of gaps in the market, which here's a gap right here at the bottom. I already have it marked off as a gap down there. Um, if you don't see anything in the immediate area, don't hesitate to look left, okay? Because even though looking left might be a long way in the past, those levels are still levels because the market hasn't been back up to those levels yet. So they're still very strong levels. Let's try track. And that's really what I do. If I can't find any levels in the immediate area, I will scroll left and find what happened the last time the market was above where I'm at. And as you see, all the way up here, this is where we get. This is current, but if you don't see nothing over here, there's no levels until you go all the way back here. Now you start to see levels reaching where you're at. Those levels, no matter how far in the past they are, they're still strong levels because the market has not been back up there since.
Okay, speaking on that, I got a question for you.
Yep.
What happened if the days are different? Like today is a bullish, but I look back on days that was bearish. Are the markets the same?
What it's not as well when we look left, what we're looking for are levels that we could take a trade at today. You know what I'm saying? So if the market was at a certain level and it dropped, by the time it came back up there, it might be 2-3 weeks later. But as you see where we at now, this date this is February. This is February right here.
Right.
Okay. So since February, if we scroll down, the market went all the way down, and by the time it started coming back up, look how far down it went. It went way down here to the bottom.
Okay.
So
Because my question is, we are comparing a bullish run against a bearish run.
no,
You
no,
go
we're not
back, you know
we're
what I'm
not
saying?
comparing it. We're not comparing anything.
I mean, okay.
All we're doing, so right, if you look at the 14th, there's nothing above us, right? To see where should we take a trade at, right?
Right, right,
So in order to find these levels that I have marked, I had to look left, and you just keep seeing there's nothing down here. So you
right.
don't have anything to base it off of.
I had done that this week, and it took me back to like February to 27.
Yeah, right here. Yep.
So,
February 27.
right, and then I was like, okay, but that day was very bearish.
Yeah. So even if it was bearish, it still created levels. The
Okay.
market can't create levels unless it's bullish or bearish. So if it was a big drop, look at this. We got a couple right here, 3 or more in a row. There's a triple threat right there on a 4 hour. You have it created levels when it drops. Also, is a strategy called boats and tacos, right? We're gonna squeeze it in a lot. See that? It's called boats and tacos. Let me move this out the way.
Okay. What also make it confusing is you can go and look back, but what if you're looking at indicators that was breaking on the day that Trump made a bad tweet, whatever, some breaking news or something, right?
Yeah, news happens every day.
Right.
The only thing that news does is gives us liquidity. If you ever traded a day that had no news, the market didn't move that much. We need news. So when news happens and it makes a big movement, all that big movement does is create more levels to take trades off of. Because even though it was news, it still created a level that you could trade from. Nothing in this market is by mistake. When that news came out, they knew it was going to make the market fall. So it still created like a vacuum to where if the market came back up to that level where the news happened, it's still going to abide by those rules, not more than likely. That's why I tell people if you follow the rules and you lose money, don't feel bad because you have no control over the market. But if you don't follow the rules and you lose money, that's your fault because the rules are there for a reason. This market has been around since the late 1800s. So the things that are taught have been taught over and over again. They might change the name of it, but it's still the same principle. So as long as you follow the rules of levels, support, resistance, a previous high is still a strong level if it never been touched. That's why we look left because even though it was a big drop in the market hasn't been back up there yet to test those levels and make them weaker than they were originally. The market, those levels are still strong until the market comes back up and touches those levels. So if you don't see anything in your vicinity, you have to look left to find what happened the last time the market was up there. Because as you see, it was a big drop from February till now, but the market always breathes. It comes right back up, but now is getting closer to the lifetime high. It's not that far. It's closer to the all-time high than it is the all-time low. So that's why sometimes you have to squeeze the chart to really see what's happening. This is a 4-hour chart, and all these yellow lines and brown lines, these are all levels. I try to get rid of some of the older levels. So as I trade and mark up the levels, if I see a level that's been there that already been used up, I'll get rid of it. But a lot of these levels are still there because they haven't been touched yet, especially the ones that's up here. But it's okay to look left, no matter what happened in the past. You don't really remember what happened in February, but the market does. The market will tell you exactly what happened back here. This right here is February.
I see what you're saying, but like you have a bullish everything rising, but everything is falling on the left. Everything on the right
Yes.
rising, everything on the left falling. Then it's kind of like, can I trust these indicators? Because I don't see a fall to my right, but I see a lot of falling on my left.
Yeah, because you're looking at indicators. The only thing an indicator does is tell you what already happened. Indicators are like receipts. They don't tell you what's about to happen. They tell you, hey, I can tell you what happened already. So you can't lean on indicators too strong because all they do is indicate that something happened last time. But levels, these lines are not indicators. These are lines that I place myself because even though it was falling back here, as it was falling, it created levels. Like this right here is a daily gap that was created. You can trade if the market comes back up to this daily gap, 9 times out of 10 it's going to reject it for a nice trade. Because remember, we're looking for areas that are more likely to turn around. Nothing is guaranteed, but it's more of a guide that, okay, next time the market get here, 9 times out more than likely is going to push it back down for a nice trade. It's not going to push it down forever like it went down forever back here. But we're just trying to make 50, 100, 200. We're not trying to make 10,000 in one trade. We're just looking for areas where last time what it do here, it created a level that we could trade off of. Which are the levels are triple threat, gaps, and you have LIS. And there's a lot more levels than that. But once again, I want you to get used to marking off the triple threat and the gaps. Start marking those off. And then as you trade more and more, you start seeing the LIS level. You start seeing more supply and demand zones. You start finding mother bar, inside bar. There's so many strategies. If I show you all of them, it's just going to confuse you. And then you get that trade paralysis or analysis paralysis where you see so much going on, you don't know which one to take a trade at. We keep it simple so that you can see the level, take the trade when it gets close to it or gets to the level.
Okay. Okay, so looking at the screen right here.
Mhm.
So I see the daily high, right?
Yeah, the red line is high.
Now, if I was to look back, should I consider buying or selling?
I always recommend selling at the overnight high. The only time I will buy the overnight high is if the market closes above the overnight high. But the overnight high has nothing to do with looking left. You only look left to find other trades outside of the high and the low, because the high and the low is right here in your face. But like this level up here, these two levels, the yellow and this brown line, I had to go left to find those areas because there's nothing up here in the immediate zone for me to take a trade off of. So I'm not going to just sit back and not take a trade or not sell anything because I can't find nothing in my immediate vicinity. That
Right, I
dog is
see that.
loud.
I see what you're saying. Let's say this one went all the way to the yellow line at the top.
Mhm.
There should be an expectation for a pullback
That's yes.
when you look left.
If it gets to that yellow line, I will be
Right.
looking for a trade. I will looking to sell from that yellow line
Mm-hmm.
or the brown one because the brown line is a swing high. So I'll show you right here. The brown line is all the way back here. But it's a swing high. Swing highs are still very strong levels also, especially when it's on a 4-hour chart. So yeah, swing highs and swing lows. Same thing with the 1 hour. So it's like a 1 hour swing high. And these are some of the indicators that I'll talk about in the beginning of the course. The swing high is a very strong level. Your pivots are very strong as well. So I have taken trades off of these overnight, the swing highs or the swing lows. Because as I said, you have to look left because other than if you don't look left, you won't find any levels up here. So even though the market dropped back here, that's just letting you know that there's still sellers in that area because they pushed the market down for the last 3-4 months, last 2-3 months. So there's still sellers up there. And if you fast forward it, you'll see how the market bounced off of those areas.
Mm-hmm. I hear what you're saying. That's kind of like there's two things that play here, but I get what you're saying. But it's kind of like you stuck in the middle of a decision here.
Yeah, that's the reason why I chose this day because the market was so high. I wanted to show y'all what do you do when there's no levels above you.
Right.
You go left so you can find those levels. It's easy to find levels if you only got to go 2-3 days in the past. But what if there's nothing up there for 2 months? You just got to keep going left because you don't know what to judge it off of.
It comes back to my first question is like, you kind of stuck with this line here.
Which line?
If I look back, that was a, you look back, everybody was selling on the 27th
Yes.
compared to what's going on now. And if I recall right, I believe it went higher because I know I did it this week because I saw the same thing and I wrote it down as a question to ask you. But
Yeah.
I believe it went higher, and then it was kind of like everything to my left was like you comparing a red day versus a green day. So it kind of
No,
like
not, we're not comparing days. All we're doing is looking for levels to take a trade off of the last time the market was in this area. We're not comparing the days. We're just saying on the 27th, here's a triple threat that happened
right,
that was
right, right.
created from the drop.
You are
So
search you are searching for a level that more likely to happen again because of
yes,
trend. You're looking for this
yes,
trend though. But the
yes,
trend on the trend today is a green day trend versus a day that has a red day trend.
yes, because the market has to go back up to liquidity. It has to go back up
Mhm.
there to test to see if there's still sellers there. Since this is the first time the market been back up there since February, there's still sellers that's going to push it down for a nice trade. It's not going to push it down forever as a trend to the downside, but it is places where you can still get in and get two, $300, $400 trades.
Yeah, I get you on that. Right.
We're, we're,
I
we're
understand
not
that.
we're not looking for the market to have another drop like it did back then. We're just looking for areas where we can get in, take a nice short, and let the market continue up.
Okay.
Or you can look for an area where you can wait for it to pass the area that you have marked and look for a good area for the pullback and continue buying up. Because remember, if it's resistance, once it closes above resistance, that resistance turns into support. Vice versa. If it's support and it closes below it, that support will turn into resistance. The closure of the candle is what really determines when it turns to support and when it turns to resistance or when it flops. So just because it was a red day in the past, we're not looking for it to be another red day. We're just looking for it to get a nice little short because it was a red day. Because there's still buyers up there if the market has never been back up there yet.
Okay.
Because in order for a level to go to weaken, it has to be tested. So a red day creates a lot of levels that you can trade off of. In this past week, like I posted the results, I took a lot of short trades off of those levels. And I'm talking about 100, 200, get your money and be done. Because if you've never got a payout yet, your goal should be just finding out what your average is and just learn how to be consistent.
Let me ask you this.
Mhm.
Are you saying there are traders from the 27 still holding on to contracts to sell?
No,
If
not
the market
traders.
get, I mean,
Not necessarily, when we say sellers, we're talking about liquidity. It's not
okay,
a person sitting there. It's just liquidity that hasn't been tested yet. So when the market gets pushed down, there's still a lot of resistance up there because the market hasn't been back up there to test to see if they're still pushing down.
okay. Let me ask you this: who's who's causing this push down?
Who's caught? You mean what's causing it? It's
Yeah,
just it's just a market structure is caused it. There is when you're trading, the market makers, people that are that trade for companies, they see the same levels that we're looking at. They know that there's sellers, that there's people like me and you placing orders at these levels. So their job is to get to those levels, get us into a trade, and move accordingly so that they can make money off of our trades as well. So they see that we're up there. These levels, me and you aren't the only one that knows these levels. Plenty of people know these levels. So that's why there's still liquidity up there. Because not only did the market structure create it, but traders like us see it there and we're waiting there to take a trade as well. That's why you can still make money off of old levels, because when the market goes down or when it goes up, it creates levels on the way down. It creates levels on the way up that you can trade from later on. So what created this drop is people like me and you, market makers, news, all that stuff created liquidity. Liquidity is not a person. Liquidity is what happened before still lingering. That's what creates liquidity. And you take trades off of liquidity. News creates liquidity. Days that there's no news, you'll notice the market looks like it's almost moving sideways. So when you see a big drop or news happen, that's actually a good thing, because that gives me something to trade off later on.
Okay. It kind of like I'm envisioning like this. There's this machine that just swaying back and forth, and you have to
No,
move with the machine.
no, not really. No, not really. It's just like it's just market structure.
Okay.
You know, higher highs, lower lows, stuff like that. What happened in the past still affects today if it never was tested. So if it was a big drop and it created a gap, or it created a swing high, or it created a triple threat, those levels are still very strong because the market never went back and tested them. Especially with gaps. The market absolutely hates gaps. If you look at the gaps, they all get filled eventually. Like now, the market was on its way up because there's a lot of gaps up top that haven't been touched yet. So it's trying to get back up there to fill them up. But the market breathes. It breathes in, it breathes out. Sometimes it breathes in more than it breathes out, but it goes up and down. That's and historically, the reason why I like Nasdaq is because it grows 5 to 10% every year. So no matter where the market is, 9 times out of 10, by the end of the year, it's going to be higher. And you can zoom in, you can see recently this was the biggest drop that happened in years. Well, not years, but months. This is a daily chart. In February, the market, the bottom fell out.
Mhm.
So that big drop in February, all that did, look at all these levels that it created. And on the way up, you can see how it followed these levels too. How each one bounced off these different levels. And even if I fast forward today, you'll see how it bounced off the levels that I created already.
Okay. When it get beyond the highest point, then what do you
Yeah.
do?
Now, when it get
Just.
behind the highest point, I will only
Mhm.
look for pullbacks. When it gets to a point where there's nothing back here, all you
Mhm.
can look for is pullbacks. It goes up, it pull back to one of these levels, you buy it, because there's really no sales you can buy. And right on around here, we were there. Around here, we had this to go off of, and you can see how. Look. Matter of fact, I can zoom it right there. You see right here, the last time. Look at this line right here. It got to the high of this right here, and almost bounced right down, based off of these levels back here. It never even got all the way up here. It stopped right here and bounced down. And it's funny this day right here, because I was live and I literally I called this move. I'll zoom in for you. This right here, I called it live, because these right here are considered dojis. These are considered dojis. When I looked up and I seen it was 3 dojis in a row, I told them the market about to go down. I said it live, and it's literally a candlestick pattern. Where's it at? I call this candlestick pattern right here. This one right here. See that? The market was going up. It was 3 dojis. Normally means the market goes down. And that happened to a T. The market was going up, 3 dojis, market go down. The market follows patterns, which is just structure.
Mr. H,
Yeah.
when would you have gotten in after those 3 dojis?
Well, this right here is a daily chart. This is a daily chart. So it was no real time I would have got in. Just by seeing this, the next day I was looking for sales more than I was looking buys.
Okay,
You know
okay.
what I'm
Well,
saying?
let's
Like
just say let's
my
just say it was on
overall, huh?
let's just say it was on a 5-minute chart.
Yeah, if it was on a 5 minute chart,
Yeah.
I would be looking forward to retest, which what it did right here. It went back up, it retested the last doji and immediately went down. This right here came back up, it tested that doji and went back down.
Even
So
though those are red candles, those
yeah,
dojis.
yeah, well, yeah, because even though they're red, a doji is not necessarily a 100% doji, meaning there's no difference, right? These are still considered dojis because it's still more what is it called? Wick. It's still more wick, way more wick than actual body. And since this is a daily, it's really hard to get a true doji on a daily because this is a whole day. The market will literally have to open and close at the same exact spot, which it didn't. It opened and closed very close to the same exact spot. So it still created 3 dojis. So what that told me is the next day, my bias was shorts. Not saying you couldn't make money on a long, it's just my bias was shorts. Because I seen 3 dojis in a row, I knew 9 times out of 10 I'm gonna have more success looking for a sell than I would a buy. And sure enough, it went down every single day, 4 days in a row after that. And the only reason why I seen that is because I literally will study these. All these are different setups. And when I seen that, it immediately reminded me of this right here. And they call that a Bears TriStar. I don't remember the names of all of them. I just remember the patterns. See right here, they got long-legged doji. It's not exactly a clear line. It's still green or red. It's just is basically more wick at the top and bottom than you have body. Like these are inverted dojis. You know what I'm saying? Now the ones that have a little bit more are considered hammerhead or hammers. You know, it's just different setups. But all these are still very valid when you see them in the real market. And I put one of these in the course, but I also Google them because sometimes they're having way more than others. But yeah, all these setups do happen every day. So even in times where I don't see obvious trade, if you understand candlestick or market structure, these are all different types of structures that you can see every day in the market. And that's why I only trade for an hour, because if I sit in front of my computer, I will see trades all day because these are all different setups that happen every day. So that's another way that if the market is at the highest it's ever been, like when these days that it was all the way up here, the way you can find trades is by looking for patterns. Since the market's so high, there's nothing left to look at. You can't go left. You can look for patterns that happens on the 5 minute or the hour to take trades off of. If that helps. And there are also indicators that can help me help point out a lot of those things as well. Right, it's literally called candlestick pattern. You type in candlestick pattern, double click it, and you can choose what kind of candlestick you want it to find for you. and it will find these setups for you so that you can see what they look like in the live market.
But here's the problem with that, with those candlestick names. Depending on what you're looking for, sometimes they have different names for the same thing.
What you mean?
Like I was looking up a particular candlestick, but I didn't see it. Maybe it's under another name.
What one here? Well, I mean,
Uh,
they have a lot of them on here, but you can literally Google candlestick patterns and you'll see so many different charts. Like some charts I have like right here, like these are all different candlestick pattern charts.
but some of them refer to the same candlestick by a different name. See?
I mean, some of them do, but a lot of times those are people that added their own names to them. A lot of them do stay the same, but as I said, it just depends on what country it came from. Some people, other countries call them something different as well.
Because I ran into that. That was kind of confusing. But the thing with candlestick is so many pattern and so much, and you have to put them in context. So it kind of like
Yes.
it's going to take you more than a week or days to learn them. So it kind of like
Oh yeah, I've been doing this for over 5 years,
Yes.
just in futures alone. It's gonna take me some time. What I did, I would pick I picked like two different patterns, and I would just find those patterns. I didn't try to learn all of them. I just try to
Exactly.
learn like dojis and like bullish engulfing and bearish engulfing. I would just try to find those three every day. Because trying to learn all of them, you're going to be stuck sitting there in analysis paralysis. You know what I'm saying?
There's too many combinations.
Yeah, it's way too many combinations. Just find like two or three. Like this right here is a hammerhead. You know what I'm saying? I'll just find like two or three and just focus on those two or three. Like I will pull up my practice charts and I will literally circle each one that I found. And you do that because you're training your eyes to see them without having to study so hard. But yeah, I will go through my chart and I will circle. Oh, go ahead.
Uh, okay, so like I've been trying to plot some of those candlestick patterns on my chart, but it appears to me that they're not showing up as the pattern is made. It might take the next day when I pull it up, then I say, "Oh, now you show me that pattern that I put in, like three white soldiers." You
Yeah.
know, I was thinking that soon as they formed in the market, it would recognize that pattern, and then I could better choose to trade or not trade that pattern.
Yeah. So if you're looking to place a trade off those patterns, I
Mhm.
like to find them on the 5 minute chart.
Yeah, yeah. I mean, that's what I was doing, but it wouldn't be like right after the three soldiers were made. It'd be like 20 soldiers be
Yeah.
or 20 candlesticks before I actually see it, man. So I guess what I'm asking, you think my computer's running slow or what?
No, not really. Excuse me. A lot of times, like in the group that I'm in, what we'll do, we'll go to the 1 minute chart. If we like, I have a 1 minute chart open. If I see a doji on the 1 minute chart, I will wait for the 5 minute chart to make a decent move, right? So for example, if I see the market going down on the 1 minute and I see a doji pop up, I will go to the 5 minute and wait for the five to see if the 5 minute will shoot up because a doji represents a change in the market direction. So if I look at the 1 minute and I see a bunch of red candles and then I see a doji, I'll immediately go to the 5 minute candle and look for it to shoot up. And it almost happens within that 5 minute candle instead of waiting for the next 1 minute candle to shoot up. So
Okay.
sometimes you got to use it in a combination. I don't trade off of the 1 minute. I just kind of have it there as a reference. If you want to go by patterns, if you really want to trade off the patterns, But the only time I
Okay.
do that is when I can't find any good levels for me. Then I will look at the 1 minute and see if I can see a candlestick setup to take on the 5 minute chart. That is like a little more advanced. That's why I don't necessarily teach that strategy. But it works better on days where uh, when the market is at an area where there isn't anything left to look at. So when the market is at the highest point it's ever been, that's when the candlestick patterns really will step in and help you a lot because all you have to go by is what happens on the 1 minute and trade the 5 minute. But you know,
Thanks.
yeah, but the levels that I teach, which is the overnight high and low, triple threat, and the gaps, those are levels that are just easier to see to someone that's new at trading. But that's why later on I added the LIS because the LIS is another level that you can mark off and put a nice line there, and it abides by the LIS very nice. But yeah, candlestick patterns are a little more advanced. But once you learn like two or three, you could just find those two or three and whoop on them when they pop up. You know, you don't have to learn all of them. Just learn a couple that can really stand out. Find
What I have noticed with the candlestick pattern is not to immediately jump in, just wait for confirmation. You know
Yeah,
what I mean?
yeah. And that's like when I take a trade, I normally only take a trade if I have at least one confirmation. So like this right here, this overnight high, the reason why I would take this more than likely is because right here is a 5 minute swing high, right on top of the overnight high. So that's to me, that's a confirmation. But confirmations are one of the reasons why I would more than likely take a level. We can fast forward a little bit. We'll fast forward just a little bit, see what happened. A little 1 minute. Either there was any dojis. All right, so see right here. Now see this right here? The market was going down, a doji was created, and then 1, 2, 3 minutes later, it shot up. So this is a 1 minute chart. So if I had the 1 minute chart open and I seen a doji at 9:28 right before the open, I'm like, okay, I will go to the 5 minute chart and I will wait for the open to see if the market's going to shoot up or down. And look what happened right at 9:35. The market shot up. And if you look at the 1 minute, literally at 9:28 on the 1 minute, the market was going down. A doji was created. By the time that 9:30 hit, skyrocketed. So when you see a doji, when you see candlestick setups, it don't mean it's gonna immediately, as soon as the setup happened, it's gonna immediately react to it. Sometimes it might be 1 or 2 minutes later, but you just have to be aware that they are there. And right here with the 9:30, this is the overnight high. When it went up, that right there is called a sweep. That's called a sweep. So what happened was a lot of people were sitting here at the overnight high waiting to take a trade. The market got to that line, went a little bit above it to snatch up everybody's lunch money, and then it went down. Sometimes you have to have a little bit of wiggle room in your trades, but at the end of the day, that still was a great trade. Even if you got in right here, if you were able to hold on to the trade, it eventually went down and made you plenty of money. So it's still abided by that overnight high as a strong level. It just had a little sweep above it, and then it came down. Just because you mark off a level does not mean the market is going to stop dead in its tracks for you. That just means more than likely it's not going to just blow past that level like it don't exist. It's still abided by the rules. It just went a little bit above it and then came back down. That's why I always push building that cushion in your account for situations like this where you might be negative 400 or 500 before it turns around and makes you $1,000. You know, the way I would have took this trade when it got to the line, I wouldn't have jumped right in because this was such a strong move up. I would have waited for it to go a little bit above it. I would have took the trade as it came back down. So as it was coming back down, I would have took the trade as a sell and let it ride all the way back down. I wouldn't have just jumped right into the trade because it got to my level because this big green candle was just moving way too fast for me to jump right in. I would have waited for it to come down a little bit, then jumped in. And that's kind of how you defeat those swings when it swings like that.
I got a question for you while we're on charts. I noticed that like you have all charts. The markets did not transfer to a micro chart.
Well, what do you mean? Well, I'm on M&Q right now.
Yeah. Right.
So when you do all charts, it's only going to put them on all of the same chart.
In Qs, right? So
Yeah. So if you put a marker on NQ, it's not going to go to M&Q.
okay, is there a way you can?
M&Q is slightly off.
That's what I'm asking. Is there a way you can go around it?
No, because
you're just gonna have to mark them up.
Yeah, M&Q is slightly off from NQ.
Okay.
They're not at the same amount. Just like the open was the NQ was at 0.25, where M&Q was at 0.75.
Mm-hmm.
So they're normally off by like a couple points. So that's why you don't want to necessarily have a level mimicked on the NQ and M&Q because it might not be the same exact level.
Okay.
Yeah. Because even though they're both in NASDAQ, it's still more people on NQ than M&Q. You know what I'm saying? Like it's still slightly off. So yeah, just to be careful.
Okay.
But what I do, my evals, I trade my evals on NQ. I trade my PAs on MNQ. I think that's one of the ways where I was able to be successful faster because I never got a brand new PA and just kept trading NQ. If that makes any sense.
Yeah, you taking smaller risks.
Yeah. Yeah, and also 5 micros is only half of a mini. So instead of trading $5 per tick, I trade $2.50. And as fast as NQ move, trust me, $2.50 is more than enough. Remember, you're just trying to, when you first get a PA approved, your very next goal is to get to a payout, right? Not to risk $5 per tick and hope you make it. Lower your risk. I don't care if you have to do 2 micros, 3 micros. I much prefer you trade micros on a brand new PA and do $50 a day, 50 to 100 until you get a little more comfortable. If you want to do more, you don't have to go right to minis. You could do 8 micros, 10 micros is 1 minute. So you could go all the way up to 10 micros before you could be ready to switch to a minute. And you can also stagger those micro contracts. You don't have to do all 10 in one trade. You can do 5 here and 5 here. You know what I mean? Like you can mix it up a little bit. So with micros, you can play around with your risk versus reward a little better. It's a little more lenient than it would be on minis. Because minis you either do $5 or $10. There's no in between.
Here, bro, I'm gonna go to the email. No. I'm gonna go to the bathroom. Go ahead.
But that's the reason why I like trading micros. And as long as I've been trading a brand new account, still get micros. Unless it's my 250. When I got to prove my 250s, I did not go micros. That's a 250.
Mr. H, can you go over that trade one more time, where it goes beyond the red line and then comes back
Yeah, let me,
when we enter the trade there?
yeah, let me move the time back to 9. That was right at 9:30, right?
Thank you. Uh-huh.
Yeah. That was 9:30. As soon as it pull up out of the line more. Yeah, let's go a little more. There you go, 9:20. Perfect.
Okay.
Yeah, 'cause I remember that trade on Wednesday. And that's what I did because the market opened and you see that big green line going up. I was like, oh,
Mhm.
I'm not gonna just jump in.
Yeah.
Because it was just that big jump to the top. I was like, I'm gonna chill for a little bit. And then on the 1 minute, you see that doji was like change of direction. I was like, okay. It's
Mhm.
when you take a trade, it seems like it's a lot, but the more you practice, it happens within seconds. It's like 1 minute doji is gonna shoot up. Let me wait. You know,
Yeah.
like within seconds. All right, here we go. Say play. So normally, most people that are new to trading, they'll
Mhm.
right click and they'll put sell limit, right? They
Yeah.
put a nice little sell limit there. They sit
Mhm.
it right there, like, oh, when the market come here, you're gonna put me in a trade. The only
Yeah.
reason why I say don't do that is because
Mhm.
of what happened. Sometimes the market is called a swing, it's called a sweep. It'll go a
Okay.
little bit above the level and then come back down. I, I,
Okay.
I call it lunch money because a lot of new traders, they'll put that resting order and then their
Mhm.
stop loss be so close because they don't want to lose no money. The market makers will put you in a trade, take your lunch money, then go in the direction. You like, I was
What
right.
happened? Yeah.
You were right. You know, it's just a little too early. So that's how I avoid those.
Okay.
You just have to look at how the candle moves. That's why it's really important to see that.
Yeah. It just gets a little tricky. I'm still trying to, being new, I'm still trying to gauge when I'm actually getting into the market and getting out.
Yeah. And honestly, even though it's an evaluation or
Mhm.
you're practicing, it's still nice to practice in micros
Mhm.
because in micros you can sit, even if you're doing an eval, you're able to sit back and relax because micros only 50 cents. So
Yeah.
if you put a resting order, you could sit back and see just how far above, how many ticks it goes above before it turns back around. You're only
Mhm.
risking 50 cents. So if you're down negative $60, you're like not really stressed about $60.
Mhm.
But on minis, that same $60 is 600.
Mm.
So being down 600, I'm sweating bullets.
Yeah, that's a lot. Yeah.
But down $60, you're like, Ian, what is that? A decent dinner for one person?
Yeah.
So that's the cool thing about trading micros. You could sit in the trade a little bit longer and get a better understanding of how the market moves.
Mhm. Yeah, that's helpful. Okay.
Yeah,
Okay, thank
because
you.
it's not really about the dollar amount. You want to
Mhm.
look at how many ticks. How many ticks do I get?
How many ticks? Okay.
Yeah, because 20 ticks on micros, 20 ticks on minis is still 20 ticks. You're
Mhm.
either gonna make $10 or you're gonna make 100.
Okay.
So here's that candle, that infamous candle. We're like, okay, we're gonna take a trade here.
Yeah.
Once again, we looked on here. It did. It created that doji. I'm like, okay, it created that doji. Let me be careful. Now I don't do resting orders. I use buy
Mhm.
market or sell.
Okay.
But if putting resting orders works better for you, you can what you can do. You can put sell up here.
Mhm.
You can click on it and just have it ready to drop.
Okay.
So you can just hover it, and whenever the market gets to where you want to, just drop it down.
Okay.
That's a strategy I used before I started doing just buy market and sell market. I'll put
Mhm.
an order and I'll just have it highlighted, ready to drop it wherever I needed to drop it.
Mm.
That's one. I don't think I went over that in the course,
No.
but that's why
Mm-mm.
we're here.
Yeah.
Because even if the market touches it, it won't do nothing. See, it won't do nothing.
Yeah.
It's almost like a ghost trade.
It's not until you release it to do it.
Not until you release it. So if you're not quick draw McGraw yet, where you just click buy and sell, this is another way to do it.
Okay. That'll probably be good for me.
Oh yeah. And see how it resisted at that swing high?
Mhm.
Even though
Yep.
it's a 5 minute swing high, it still was like, okay, I'm gonna listen to you a little bit.
Mhm.
You might only got like $15, but it's still recognizing it. And that's okay, here it is.
Mm.
It's getting close to it. Now, if you have a nice cushion, you could have jumped in if you had the
Okay.
cushion. But
Okay.
since we don't have a cushion, we're gonna see how it sweeps. And I'll just hover this right here. And also we got the timer. Looking at the remaining timer, we got 37 seconds. Because I'm looking to see if it's gonna close above or close below is a
Mhm.
good indicator. But because I want to take this trade, I'm like, there's no way it's just gonna keep going up yet.
But then it end up. Oh snap.
It's swept up, it's taking people lunch money because they got it so close.
Mhm.
There you go, still going higher. Now, when you see how it tapped 3 times, you
Yeah.
could have took a trade right there for a short.
Mm.
That's that three tap that I be talking about. When it taps 3 times,
Mhm.
I would take a short there because it's trying to get above a certain level and it can't. So that's why, like, if you turn away and look back, you
Yeah.
lost the count.
Yeah. It's quick.
Yeah, it happens quick. But yeah, I see it's coming down now. So I'm like, okay,
Yeah.
want to come back down?
And when it hit that line, that's when you, okay.
You just got to be patient.
Hey, Mr. H,
Yep.
I didn't catch what you was doing. What are you doing? What kind of, how
I'm
are you
waiting.
trading?
This is how I take a short at the overnight high. If it swings above it a little bit, I'll just wait for it to come back down before I put a trade in.
You selling. Because I see where you got the sale up there.
Yeah, because I'm looking at no. So the sell up here, I put the sell up here, but I hover because I'm waiting for it to come down
The
here.
top to the line. Yeah.
I wanted to go below this.
Okay. So,
So that's even though it's up here, I clicked on it and I have it hovering, so that way I can just drop it down whenever I wanted to place the trade.
what are you waiting for, Bob?
So I'm waiting for it to go below the overnight high because as you see, it's struggling to keep going up.
Mm-hmm.
So,
So that tells me it's not going to just keep going up just yet.
right here.
It got to come back
This is
down
where you want
so
to
they
get
get
in.
some power to
Got the
continue
red
up.
line, red line. So it went up, it broke. Now he waiting for it to see
Come
if it's
back
gonna come
down.
back down and then keep going down. Because he's in a sale market. So
Mhm.
sale means
And
going
remember,
down.
this is still the same 5 minutes. So it's not like we're sitting here for hours.
Right.
So now he's saying, okay, I'm gonna bring it down to the line. When it come down here and hit the line, I'm gonna jump in. See,
Mhm.
now he
See,
was
now I'm in there. And mind you, this is micros, okay? There's only one micro. So those look like a lot of money, but you gotta put it in context of minis.
you see what he did? He took it from here, took it from
But I
here.
waited for it to get back down to my line because it can't go no higher. It's trying to go higher, but it kept getting resisted.
So now he probably come out when he hit this line here.
You just chill and trade.
What he's
Now,
gonna do?
my trades, I don't have a target. You see, there's no green line down there.
Mm-hmm.
He might let that shit
Now, if
go.
it comes back up here and knock me out, so what? I'm willing to take that risk. But look, where are my? I don't move up. I forgot I have my trailing stop on there. But look at it. People think
Mm-hmm.
you can't make money in micros. Look, 30. I just made what, $40 in micros. You can still get money in micros, and you're not risking that much. So
So
if
you
I have a
went
bad
in.
trade, I'm chilling.
So you went in at the line and then you got out of it.
No, it's still in there. I went in at the
It's still
line,
in.
and
Okay. So
I'm still in the trade. We're just up $14. Which
oh yeah.
$12 is 120 in micro in minis.
Mm-hmm.
And you can just that's why I like micros because you can just sit in the trade and chill.
And
There's
just
no
let
rush.
it. Okay.
Because even if it comes against you, what I'm gonna lose? 30, $40,
Mm-hmm.
$50? On a $25,000 trade account, you have $1,500 that you
Mm-hmm.
can risk. If you're trading 50 cents a pop, you know how many times you gotta lose to lose 1,500?
Yeah.
That's why I was,
Lot.
saying to use.
If you got two contracts, that's $1 each. You
Mm-hmm.
have to take a bad trade and lose 1,500 ticks in the
Mm-hmm.
market.
But I mean, you can't lose it because I did it.
Oh yeah, you can do it. That's why that tells you need to practice a little bit more. That's all. But the time it takes you to lose a 25K account trading micros is a lot longer than minis. And by the time you lose that money in micros, you probably learn so much because you don't really lose. You learn. You learn from all those bad trades. But trading micros is what taught me how to stay in a trade a little bit longer. That
Mm-hmm.
way, when I start trading in Q, my bigger accounts, I can make $800-900 a day because I got used to sitting in the trade a little bit longer and not
Yes.
being in such a rush to jump out.
Mm-hmm.
People be trying to overlook the micros. Micros aren't there to make you a bunch of money. Micros are there to teach you how to be consistent. And look how long we've been in trade, what, 5, 10 minutes, almost 10 minutes? And we're just chilling. There's no rush. This is how I make so much money in micros. A lot of the times when I post my results, if it's under $200, 9 times out of 10, that was micros.
Hmm. Okay.
Because I'll place a micro trade and then I'll go over to another mini screen and trade my evals while my micros are just running. Just like this, right? I'm just sitting here in the trade. I'm up 40, $50. $50 a day is 1,000 a month.
Mm-hmm.
You don't have to rush and like, oh, I got to get 500 a day. No, you don't. You don't have
Right.
to do nothing. You have to be consistent. That's all you got to do.
Mm-hmm.
If I can consistently get $50 a day, while you're over there trying to do 300, 400 a day, and you only get that 2 days out of 5, guess what? Those other 3 days you're losing money. You go in the week with $200 because you kept making money, losing money, making money. I made $50 a day for 5 days straight. You know what I'm saying? No real losses because $50 is not that hard to get.
Let me ask you this. Is the simulator real-time data?
Yeah. If you're in sim, it's still real data. You're still
Okay.
trading real data because all you're doing is clicking accounts and swapping over to your actual evaluation from simulation.
Okay.
Yeah, but this is how I make the money I make in micros. I'll take a good trade and I'll just sit in the trade. Now, if I was doing minis, I would have been out of this trade because we up in minis. This is $420 in minis.
Mm.
And
Wow.
and and the psychological part is if you can sit here and do $50 a day in micros, once you have a cushion and you go over there to minis, you're gonna be making $500 a day
Yeah.
because it's the tick amount.
Mm-hmm.
$50 in micros is 500 in minis. The tick amount is the same. It's just the contract amount is different. So if you trade micros and get $50 a day, as soon as you feel comfortable to go to minis, that's 500 a day.
Yeah.
And this is one contract. It's not like I'm doing 6, 7 micros to make $50. This is one micro. It's all mental. Don't look at it like, oh, it's only $50. No, that's about what, 30 something ticks? 40 something ticks? No, 40, the 46 is 200 in minis. Yeah, 40. That's about what, 45? Yeah, that's 500 is 100 ticks. So look at that. That's if I got the $50, that's 100 ticks.
Hmm. Okay.
That's 100 ticks. If you could practice micros, get $50 a day with one micro, that's 50. That's 100 ticks a day. So
Yes.
imagine
100.
having 2 contracts. You know what I'm saying?
Yeah.
That's $1,000 or $100 in micros.
Mm-hmm. Not bad.
Yeah, that's why people get their head knocked off. They jump over there in minis and think, oh, I got to do a whole bunch of money in minis. You need to learn micros first and learn how to relax and be patient. Look at that. We up $80 in micros.
Mm.
And you can close out at any time.
Yeah.
Or what you can do, you can click this right here and just lock in the profit. So if it comes back against you, you didn't lock in something already, no matter what. A lot of times I move my little stop loss up and I go about my business. I go clean the kitchen. I go trade another account on another chart because I already locked in. Whatever happens, I got something no
You
matter
still
what.
got something. Yeah.
I got something. And I'll do a couple trades. I'll have a couple trades and I'll bring up the stop loss to 50, 100, $200, and I go
Mm-hmm.
about my business, go do something else. I come back, I either made money or it went down even farther, so I can slide it down even more.
Mm-hmm.
But that's why I don't have a target on my ATM strategies because I want to be able, if I can get a good buy or a good sell, I
You
don't
can
want to
move
get
it.
knocked out by my target.
Yeah.
Look at it. You can just 116, one micro in 15 minutes. How many of y'all made $120 in 15 minutes at work? You know what I'm saying? You don't have to stress yourself out. Click the button, get some trades in there, and chill. And I normally trade with 5 micros.
Mm.
But yeah, that's all trading is. It went a little bit above my level, but because it kept getting smacked up right around the same level, it couldn't go no higher than this. I would have took a trade here. I would have took a trade around this area. I would have sold it all the way down. But to be more careful, I waited for it to go back to the level. Then I took the trade. This is just a little more advanced trade strategy. But as a new person, I would have just waited for it to come back below it.
Yeah.
Took my sell right there. You also could have waited for it to close below and look how it retraced. It retraced
Hmm.
right here back to the level you could have took a short.
Yeah, so it still came
So
up to the line.
yeah, so even if you miss this short, you miss this short, you could have got that short.
Mm-hmm.
That's three different areas you could have took a trade right here. So
And
you
you
don't
and it with sell limit, you said sell limit was a lot, it allows you to
yeah,
adjust.
yeah, so you could do sell limit, right? You do sell limit and just hover over it. As soon as you get below, just drop it there.
Yeah.
An-
Okay.
another thing you could do, another thing you could do is buy stop.
Stop. Okay.
Yeah, so buy stop. If what it would do, it won't. If it got here, it won't go into a buy. If it
Mm,
got here, it'll wait for it to go past it, and it will automatically put you in a buy
okay.
to go up. You know, but if you're below the market, it's buy limit. If it
Mm,
comes down here, it'll put you in the trade to go up. Right? That's
okay.
buy limit. But if you're down here and you do sell stop, if it touches this, it's gonna put me in the sell to go further down.
Mm,
So instead of buying it when it get here, because I put a sell stop, it's gonna sell it when it gets here. And I'm gonna keep here just so you can see what it does. And close this sell stop. I'm gonna move this up so you can see what it does.
okay.
See, now it put me in a sell
Yeah.
to go down.
Mm,
That's just another strategy you can use.
mm-hmm.
So look, now we have $10 in the sale, or that's 130 in minis. Look at that, it just continued the sale that I was already in. So I made my money. I put a sell stop. So when it got to that level, it just put me in a sell to go lower.
Mm-hmm.
Or I could have bought at there and it would have put me in a trade to go up. But look, it's such a strong movement down, I would have never bought that.
Yeah.
Boom, and we made money on the way down. Look at that, we have 158, one micro. That's why I love NASDAQ. It moves more than enough for you to get plenty of money within an hour. It's only 9:49.
Yep.
That's why I only trade from 9:30 to 10:30. Because if you can't get money in an hour, you're not going to get money in 2 hours. It might be some other level that it might get to, but an hour should get you enough money. Now, if you trade at night, 1 hour at night might not be enough to give you money because it moves like molasses at night.
Mm, okay.
But at night is a good time to practice also because it also teaches you patience.
Mm-hmm. It's a little bit slower, so it's like it's not moving too
Yeah,
fast.
yeah. It won't put you in a trade and take you out of a trade in two
Mm-hmm.
seconds. You're like, what happened?
Yep.
Let me ask you this, since you're speaking about night, like at 6 p.m., should you reset your daily highs and lows? If you
Yes,
come
yes, yeah, yeah, yeah. After the market closes at 5, I don't use no levels unless they haven't been touched yet. If the level haven't been touched yet, I'll keep it there if I trade at night. But if the level's been touched, I mean, if it hasn't been touched yet, I'll keep that level as long as until it has been used. Because there's still strong levels until they've been used up. So like this level down here, I will keep these because they haven't been touched. Levels up here, I'll keep them because they haven't been touched yet. But at night is when I would use the prior day open close for a level. Because remember, 8 o'clock, even though the market opens up at 6, Japan don't open up until 8 p.m. Eastern Standard Time. In England, I think England is like 3, 4 o'clock in the morning.
Let me ask you this, just to be clear. So it's like setting the highs and low just as you would at 9 a.m., 9:29 a.m.
Yeah. Yep. Because the 930 or 929 is from 1800 when the market first opens all the way up until 929 when the New York market opens. That's an overnight high and low. So if you want to trade the Asian market, which opens up at 8 p.m., I will mark the prior day open and close. Instead of the high and the low, I will mark the open and the close of the previous day. I found that to be more successful than because it's not really a overnight high and low because the market just opened up at 1800, which is 6 p.m. And the Asian market opens up at 8 o'clock. So it's only been 2 hours. So I would use a prior day open and close as a level if I was trading the Asian market.
And then when it comes to the triple threats, you say it depends on if it were hit or not,
Yeah.
that you will keep it.
Yeah, if it hasn't touched the triple threat, I'll leave it there until it gets to it. Because that day, if I mark it on one day and it don't go back up there until 4 or 5 days later, I don't have to keep marking my levels every day. Because then if they've been touched, I remove them. If they ain't been touched yet, I can leave them there. That way, when it gets up there, I'm like, oh, that's that level from 3 days ago. Cool. It's less work in the morning. The only level I don't really take the next day is the LIS. So if I take the LIS from Monday, which you're supposed to trade on Tuesday, if it never touches the LIS, I won't, dog barking. I won't take that LIS on Wednesday. I will use Tuesday's LIS on Wednesday, not Monday's.
All right.
Because
How
the
do I
LIS is only the day prior.
How do I find a LIS?
It is the 1605 candle, closure of the 1605. It's called line in the sand or LIS.
Are you taking the high or the low on the
The closure. So whatever it closed at 1605, I will mark that line, and the next day at 9:30 open, that is a level. It's not really a level overnight. Because 1605 is when the institutional traders leave. And then 9:30 is when they come back. So that level is still strong when the market opens the next day.
Is it holding true for the 6 p.m. market too?
No, I've only used it the next day because is when New York markets leave work, and then 9:30 is when they come back. That's how I look at it. So overnight is just it'll just be a line on your chart. I don't think the market really abides by it too much. And if you
Is there
look,
one?
this orange line is my LIS. So it was created back here, the 1605 candle, the closure. the closure, and then you see overnight the market just played all around it like it didn't even exist. So they don't do anything 6 o'clock at night. But the next day, after 9:30, the next day is when I will look to take a trade off of the LIS. And if it's below the market, I'm looking for a buy. If it's above the market, I'll look for it to come up and sell. Or if it's below the market, yeah. So if the market is below the LIS, I'll look for a sell. Right now, the market is above the LIS, so I will look for a buy if it came down here. You see, on the 5 minute, it creates a lot of liquidity also. The market's trying to go down there, but it keep getting pushed back. Try to go down, get pushed back. Now it's trying for a third time to come down here. I'm gonna fast forward because I want to see what it did around that area. There's a lot of heat down there. That's why I keep going back up. Because remember, each candle tells you a lot of info, especially when you see a long wick going down. That tells you there's still buyers pushing it back up. Look, it couldn't even get down to the LIS. Yeah, it shot back up. Now it got some little strength. Now it's gonna try to come back down again. Let's speed it up a little bit. Now, right now, the only trade that we really could have took was the overnight high trade. Look like you're trying to go back to the overnight high. This is what you would call a narrow range trading day. Now, see how it created that swing high and that swing low? It did that because it's a narrow range. It's ranging from this high and this low, and it's just playing around in the middle. The way I would trade this is I would literally take a trade at the bottom of this body. I would have bought it at the bottom of the body, and I would wait for a sell at the top of this body. That's the way I would trade this. I would wait for it to come here, look for a sell, or come back down here and buy it because there's narrow range between this two. I'm not saying that's going to happen every time, but the more cushion you have in your account, the easier those trades are. Because I have 200, I have two 250K accounts, or some of my accounts are like 5, 6, 7,000 cushion. So I can take a trade where it goes negative 6, 700 and not worry about it. That's why building that cushion is so important. Because the more cushion you have, you can take bigger trades and sit in the trade a lot longer. But this market just playing back and forth. That's it. If you didn't got your money off the overnight high, hey, there's your 100 for the day. Yeah, Mark. Yeah, Wednesday. I think that was one of the trades I got. There we go. And see, at this point, it's 11 o'clock. I would have been gone. Yeah, I don't know what this market did after that. But yeah, this is what a narrow range trading day looks like. It just ranged between two levels all day for most of the day. The open was the most movement you got, and then it just played around the rest of the day. Look at that. Got back to the overnight high and bounced back down off of it. It's 11:30 at this point. It just now got back to the overnight high, and you could have sold it again. Uh, And it's just how the market works. It still abides by that overnight high rule because it went down, came back up, hit it, came back down. Now it looks like it's going to try to fight and get above it, but as I said, I'm only in the market till 10:30. And then, anybody have any questions? I think we're over an hour, well over an hour.
No more questions on that, but I did have one more question on the
Yeah.
chart. When you know how where you're selecting the date,
Mhm.
like June or what have you, I need to go further out, and I cannot remember um how to modify that.
On your chart, you can right click. Actually, double click on any of the candles right here
Mhm.
where it says days to load. You could go back
Yeah,
on and
okay, because it was at
double
the
click on the
top where it had
candlestick.
it named, where it was at the top where it's like NQ June
Yeah,
or
right
yeah.
here.
Okay, so it doesn't matter that it's not there. Just make sure that I have the number of days
Yeah,
indicated.
yeah. So you just
Okay,
double click any one of the candlesticks
okay,
and it pull it right here. Days to
okay.
load.
Yeah.
Now remember, well, y'all got till June. The contracts are going to renew in June.
Mm-hmm.
So right here, MNQ 625,
Mm-hmm.
like the within the first week or so of June, is going to ask you to update it to I want to say all September. So it'll go
Yeah,
to
that's what I'm
September
talking about.
2025.
Okay, so that's when I'll be able to do that. Okay.
Yeah, yeah.
Okay.
So
Well, I'm
usually
good.
within the first week of June,
Okay.
because you don't want to switch over too early because
Mm-hmm.
there's not enough traders on that schedule yet.
Gotcha. Okay. Okay, thank you.
Of course.
Mr. H, I got a question.
Yep.
Um, okay, so I got my desktop. I had to go get a new desktop, right? And I want to put my what you call it, the VPS on
VPS.
this. Can you guide me through it right quick?
Yeah, with the VPS, all you do is go to remote, type in remote desktop in the search on your
Okay,
computer, and the remote desktop should pull up, and you would just put in the IP address and the password.
okay, good. All right,
Log into your VPS, go to the internet, and log into your VPS because if you don't have your password information, it'll be on your VPS online.
okay.
Because you have Ninja Mobile, right?
Yeah.
Yeah, yeah. So yeah, just go to ninjamobile.com. And if you don't have your password and username, but if you have it written down, just search remote desktop and punch it in.
Okay,
And if for whatever reason you can't get it set up, just call me tomorrow and we'll get online.
okay. I got you.
For sure.
Thank you.
All right, anytime, man.
I got a question for you. Is
Mhm.
there a faster way to execute a trade for example, like there may be a lag between my mouse click if I hit the close and the closing and the price I actually try to close on.
Yeah, for the slippage, hotkeys, you can create hotkeys.
That's a hotkey, you said?
Yeah, like Control V is buy, Control C is sell, or something. And to do that, I can pull it up for you. You go to new, and I think it literally says hotkeys. And tools.
Yeah. Yeah.
So we can go to them in my computer.
Okay, come on. Wait a minute.
I know it's in here somewhere. I don't know. Oh, it's right here, the hotkeys. It's right in the tools. Order entry,
What?
buy market control B, sell market control S.
I need to close like the
Yeah.
Can you put in
Right
a
here,
number? This ain't- Oh, there you go.
or close 18 strategy or cancel last order, close
OPT.
position.
yeah.
Right, close position. Yeah, the hotkeys is the fastest way I can think of.
Mhm.
PLEX
PLEX.
705
You have to be quick draw McGraw sometime.
705.
50.
Huh?
Yes. So then it would be, go back.
This is it here. This is the information here.
You trade inside days and everything, that's correct?
Put it on there.
What's that?
Information.
You trade inside days and everything, right?
My keyboard.
What do you mean by inside days?
For instance, like if you got a daily candle, right?
Hmm?
And then let's say that was yesterday. And then let's say today's candle is on the inside. It's basically like a daily harami, so to speak. You follow what I'm saying?
Yeah.
You know,
Yeah, 2, 3.
For the present candle like today would be like inside of the previous day's candle. You follow what I'm saying? Because usually I don't.
So like right here,
Sure.
so right here, you say like, do I take trades based off of this, yesterday's candle?
No. Go back to the go back a couple. Go back a couple of candles. Now bring it up. So like this. Now go to the right. Right there. At the inside day, right there.
Yeah.
Okay. So use the trade there that in, and like to say that was, let's say this right here was yesterday. Okay.
Mm-hmm.
And then the next candle is the previous day, this today.
Mm-hmm.
You trade that still right there, that inside day?
No.
Or you wait.
No, yeah, I don't trade it. That's not a strategy that I use. No. I know the strategy you're talking about. I know people that do trade that way, but I don't.
Okay, good deal. Because you like to just pass.
Now remember, the way that I teach is for beginners. Now
right.
the way that I trade, that's how I traded in the beginning. The way that I trade now is slightly different.
Okay, good deal.
So I'll show you. Now, when you my mentor, which you guys have the option to join our day trading, our Monday through Friday trading group, he'll teach you how to use this.
Okay, good deal.
Yeah, it's another level.
Hey man, we here for it all. You know, I'm for everything,
yeah,
man.
There's another level to it. It's calculated. I'll show you what the charts this is what I trade off of.
Okay,
this is what my charts look like. So when it was choppy, I would have been still making money because I have other levels that see how I bounce off this orange line.
Right on.
I would have been taking trades off that orange line all day.
Okay.
This right here, I would have been taking that. I would have took trades off of this one too.
Okay. Good
so
deal.
I see there's a lot more trades that happen.
Right.
But I just want you guys to see the trades, basic trades. That way, when you get here, it's not overwhelming.
Right. I got you.
But this is what my mentor would teach you how to do. But also with him, you're trading Monday through Friday with us.
Right.
Live. So he just prefers that you have this understanding first before you go to him. I think we have a couple students that are already in that trade room with me. But yeah, this is how my chart normally look. But it's fun when y'all ready. Come on and join us.
Oh, we gonna get over there.
Yeah, it's fun. That's who I was in Vegas with. We was all in Vegas trading together.
Is that like a yearly thing you guys do as a
Yeah,
group?
yeah, yeah, it will be. Because I
Oh,
was last year and this year so far.
oh, nice.
Oh yeah. Yeah, we was over there chilling. And it's just even though we trade Monday through Friday live, it's just different with him sitting right there in the room with you.
Mm-hmm.
You know, he's looking over his shoulder, showing you, actually pointing out like, yeah, this. You're like, oh, okay. You know, stuff I thought I knew. Once he pointed out, I was like, I guess I didn't know. You know, but that's the main difference. I can show you how to give yourself a raise and quit your job. He'll show you how to make 15, 20,000 a day. So that's what I'm trying to get to now. I'm trying to get that 15 a day.
Definitely possible with this volatility going on.
Exactly. Exactly. People, I'm not a Trump fan, but he damn sure made this market jump.
Booming.
So he say something stupid, the market get to reacting, and I get to placing trades. What was that commercial? You can learn a lot from it, Debbie.
Very quick, get on that.
But yeah, it's good to have liquidity. You need something to move the market. And we have any other questions? Because it is at 2 hours.
I got a
Um,
question. I got a
Mhm.
question for you, but it has nothing to do with trading. Kind of like
Mhm.
my account setting up Ninja Trader account
Yes.
because I'm getting like it telling me my data is like 10-minute delayed.
You have Tradeovate or Rhythmic.
Trader.
Okay. Did you log into tradeovate.com
Yes,
and you typed in so you have Apex, right?
yes,
Did you when you logged into Tradeovate, did you use the username and password that Apex gave you?
yes.
Okay. We have we done our one-on-one yet?
Last
Oh,
weekend.
we did ours last week. Um, well, well, hit me up tomorrow. If we have to, we'll do a Zoom so I can look at it. Because if I can look at it, I can tell you what's going on.
Okay,
Yeah, give me a call tomorrow. I can look at it. Because that way it's before the market opens.
I'll give you a call between about what time? Right,
Anytime, I'll be up.
anytime tomorrow.
Yeah, yeah. I'm gonna live about 5, 6 o'clock in the morning anyway. So you probably ain't gonna be up that early, but yeah, I'll be ready.
All right.
Yeah, I'll sit down, look at it, make sure your data is on time, because that'll lose you money.
I don't have a question, but I just wanted to ask if it's okay after the call if I can stay on and ask you something, just
Okay,
for a brief second.
okay, yeah.
Thanks.
All right. So anybody else? Because yeah, this is recorded. I'll start recording too.